Are you curious about which 3 stocks I think are promising for the upcoming period? Will history repeat itself, and will I manage to find the best entry points again, as was the case with Adobe or Netflix? Or do you not want to end up like one of my friends who put everything into tattooed chef stocks? Stay with us for a few minutes and all will be revealed. This is the Smart Invest. As you can see, a surprisingly big rally has started in the past 2 months. And to the surprise of many, the S&P 500 index has risen nearly 15% and is approaching its all-time high. If we look at the major blue-chip stocks, they no longer seem as cheap as they did a few months ago, and we feel like we might have missed out on something. So which 3 stocks have I invested my money in which I believe still have plenty of growth potential in their prices? In this video, I won't go into deep analysis of the companies, as that would be very long, and I've recently made a video about these companies which you can find in the description. However, I have prepared 3 possible price predictions for the future, and we'll try to calculate what results we can achieve with these stocks. The third on our list is none other than PayPal. You might think of some shitcoin rather than a leading financial services company when you see this chart, but let's not get hung up on the details. PayPal Holdings Inc. operates a technology platform that enables digital payments on behalf of merchants and consumers worldwide. The company provides payment solutions under the PayPal Credit, Braintree, Venmo, Zoom, PayPal Zettle, Hyperwallet, PayPal Honey, and Payday names. PayPal has seen better days, and it doesn't look like it's about to break new records in the coming weeks. PayPal currently makes up just over 4% of my portfolio, and I have an average price of $70 on it. Here are the 3 possible forecasts I prepared. We see that the stock was traded at a huge price-to-earnings value in the 2020s, then the sudden decrease in profit margin and EPS, and the decrease in price-to-earnings value led to a huge drop in the stock price. That's why it's very important to always pay attention to different valuation indicators and try to justify our purchases with solid fundamental factors. The first is a very pessimistic forecast, where PayPal is expected to increase its revenues by about 5% per year until 2030. The profit margin continues to decrease over the years, and due to the worsening outlook, we assume that PayPal will trade at a price-to-earnings value of 18 in 2030. As a result, we would get a stock price of $49 in 2030, which would not be a very good investment. If we assume that PayPal continues to be able to increase its revenue by 10% per year and is able to maintain its profit margin of around 12%, then we get quite different values. We assume that the company will buy back its shares at a greater rate, and thanks to these it will still trade at a price-to-earnings value of 28 in 2030. In this quite conceivable case, we get a stock price of $210 by 2030, which does not seem like a bad return. If we go even further and assume that PayPal will be able to take advantage of the opportunities in innovation and rejuvenate, then we can get quite bold numbers. If it continues to be able to increase its revenues by 15% per year, and is able to achieve a slightly higher profit margin with the use of artificial intelligence, then we can get a very high EPS value by 2030. The positive performance would likely result in a higher price-to-earnings value, and thus easily a stock price of around $550 by 2030. This would represent nearly a 10x from the current value over the course of 6 years. But can PayPal achieve such growth? PayPal's growth opportunities may include expanding its business account offerings, strengthening its presence in international markets, and integrating new payment channels and tools. Through optimized cloud-based processing, they can make payments between various devices and channels more efficient, and by adding more currencies to accounts, they can more easily handle payments in different currencies. PayPal can still scale its business model. Second on our list is Square, now known as Block. Block Inc. operates as a technology company with a focus on financial services. It builds tools to help people access the economy. Its products include Square, which makes commerce and financial services easy and accessible for sellers with its integrated ecosystem of technology solutions. Cash App to send, spend, or invest money in stocks or Bitcoin. Afterpay for connecting consumers and businesses. Tidal, and TBD, which is building an open-source platform and developer infrastructure that enables everyone to access and participate in the global economy. In the case of Block, I was also not so shy, and it currently makes up nearly 5% of my portfolio with an average price of $61. Here too, thanks to the terribly high price-to-earnings values, the stock price was at huge levels, but it has significantly decreased nowadays. Even in the pessimistic scenario, where Square can only achieve a 10% growth per year, and its shares continue to be inflated at huge rates. And these factors lead us to assume that by 2030, it will still be traded at a price-to-earnings value of around 20. Even then, we can see a stock price of nearly $200. If we assume that it is able to achieve slightly more robust growth, does not inflate its shares so aggressively, and there's a slightly better market mood by 2030, and it is traded at a price-to-earnings value of 24, which is still not a very high value, then we get a stock price of $300. This scenario doesn't seem so inconceivable to me, to be honest. But if we imagine a bit more from Square, and they can achieve a 20% annual revenue growth, as well as improve their profit margin and issue fewer shares, then the market will trade it at a more positive price-to-earnings value, and a stock price of $600 by 2030 is not inconceivable. This would result in nearly a 10x over 6 years from the current moment, which would be an astonishing return. But what growth opportunities does Square have? Square's growth opportunities may include exploring new markets, expanding its product and service offerings, and international expansion. Additionally, focusing on innovation and technological advancements can contribute to the company's growth. Further growth opportunities for the company may include developing financial services for small and medium businesses, as well as improving the customer experience with their digital payment solutions. But which stock is our #1 contender? But first, just quickly, a simple like or comment can help the algorithm and sponsor my hard work, guys. Thank you a lot for that. My #1 position, which I have expanded further, is none other than Tesla. After the report, Tesla's shares began a small correction, and in this zone I took the opportunity to further expand my Tesla position. Since my Tesla position is quite large, I only bought modestly, and Tesla currently makes up nearly 21% of my portfolio, with an average price of $210. But what are the 3 possible forecasts? In the pessimistic forecast, we assume an annual revenue growth of around 10%, drastic decreases in profit margin due to strong market competition, and further significant share issuances. As a result, and due to the loss of shareholder confidence, we assume a price-to-earnings value of 25 in 2030 and get a stock price of $80. In the second forecast, we assume that they can only achieve an annual revenue growth of 20%. The profit margin stagnates at 12%, and they do not issue shares in such large quantities. Thus, with a friendlier price-to-earnings value of 40, we get a target price of around $500. However, if we assume that Tesla will continue to achieve nearly 30% annual growth over the next 6 years, manage to restore its profit margin, and stop issuing shares, then we can get an interesting result. By 2030, a price-to-earnings value of 50 could lead the stock price to heights of around $2,200. But what growth opportunities does Tesla have? Tesla has numerous growth opportunities, including exploring new markets, expanding its product portfolio, and increasing manufacturing capacity. The company's further potential for growth may include international expansion, especially in emerging markets. Additionally, Tesla is continuously developing its electric vehicles and battery technology, which can contribute to its market share growth and maintain its competitiveness. The company may also have opportunities in alternative energy sources, such as solar power and energy storage, which can diversify its activities and contribute to business growth. Furthermore, the future licensing of full self-driving and Optimus also hold immense potential. In my opinion, the truth lies somewhere between the second and third forecasts. What do you think? Which company will be the front runner in 2024? And which companies do you currently see as having great potential? If you liked the video, found it informative, and would like to help me on my journey toward 1,000 subscribers, please press the like button and subscribe. Take care, guys, and see you on the next episode. Try not to lose all your money in the stock market until the next video.